All right, we are recording. Okay, welcome everyone to the Quantita Wednesday Q&A. We have had a very interesting past 2 days, but so far for us over in Quantita, for us that like to sell premium into the market, collect credit, don't get a little bit crazy buying things, right? um, we've been doing pretty good, right? Hopefully, you guys in the chat have also been doing pretty good. Now, I know some of you guys, directional traders, have been, especially today, not so much yesterday, but yesterday was a little bit better with the gap that was in front of us, right? This is Tuesday, August 25th. We had that gap close and then a rip right back up towards like the middle of price. That was yesterday, right? A little bit easier because we have that target, but today, not so much, right? We don't really have anything. We really just chopped it through, and so our idea to separately leg into our iron condor, right? We sold 77.15. That's all the way up here, and then we sold 76.25. That was our lowest point. Although we did sell this one here too. We did sell 76.40. But this one kind of hurt us a little bit as we started to come down this way. We weren't really sure if there was a chance to get a better price. And we did. We ended up getting a much better price from buying this back as a loser and then selling the 76.25. Pretty much doubled down immediately right out the gate, selling this one. And yeah, we ended the day pretty good. Initially, we incurred a negative $1,000 hit. And then we came out the day with a 585 positive. So recovering those losses and then ending green. Hopefully, you guys were able to kind of follow along with that today. But I want to go over yesterday and how yesterday was kind of peculiar with kind of like a middle of the day New York City launch A plus setup. Now, it's not one that I like to take on normally, but when the opportunity does arise, I do also take advantage of it, and I won't hold things to expiry though. So for those of us that like to hold our credit spreads all the way to the market close, it gets a little bit dicey because of the fact that we're able to see the market makers make a change, and the fact that they're willing to make that change intraday also gives us the idea that they're just more willing to move things around, move their exposures around during that time. So this is kind of what this I brought this back to you yesterday for the data. Okay. And there's one level that I really want you guys to pay attention to, and that is the 76.65. So right out the gate, I told you guys that there was no A plus setup, right? Delta and gamma were kind of flattish. We opened at the 76.90 mark. Which we were already so close. We were well within 5 points of range, right, which we call MVC touch. But even with that being said, we don't really have an MVC in terms of like magnetization power. We know that the number that we want to look for gamma side is 70 million, right? And for delta side, we want to see 2.5 billion on a singular strike behind us in price. We don't have that, right? We don't have that. And so yesterday I said, okay, we don't have an A plus setup, so we shouldn't be full sizing our hands. We should really just be looking to take trades on a reactionary level, right? We want to react to the market as price action is kind of doing its thing. When we do have an A plus setup, that's when we can put our thinking caps on and predict where price is going to go based on what we see, right? We talked about today scenario, risk, structure. What's the most likely scenario for price based on what you see? That is our first one, right? And so as the market kind of developed, we did make this bit of a slow. It was slow-ish, slow enough. Started to kind of grind down, right? Initial candle upwards and then grind down, grind down. As soon as we hit low of day, this is when we started to think, okay, this is probably telling us that there's a potential for gap close. I didn't expect the Trump candle to do it for us, but it did, right? We had a little bit of news about the Strait of Hormuz. Came down, and then I know we sold yesterday 7,700, and then we sold 7610. That's all the way down here in this area. Weren't able to collect too much on it, but it was mainly the middle one. So I know you guys saw on Twitter that I ended up starting to sell the 7645s and the 7650s. That was a little bit of a lighter size, making sure that we did sell beyond where price action actually traversed today. And it all kind of came about at the New York City lunch hour. So we talk about A plus setups a lot. This is one of them. It's if we start to zoom through on delta side, so we're just paying attention to delta. I'm not going to bring up gamma because gamma had no part in this, but notice how on the delta profile, we're going to bring you back here. Let's keep zooming through here. Around 1051, right? This was like our absolute low. I'm going to bring us to that point. So 1051, right? Looks pretty bad, right? Delta isn't really representative of confidence in the market makers' positions, right? Generally, we want to just kind of follow along with what the market makers have already kind of decided that they need to do with their positioning, right? Longs and shorts all above us and below us in price, not really that confident, but notice how after we start to zoom in a little bit further, keep your eyes on the 7665. So we can see that it's all of a sudden gone to 1.9 billion. As we continue further, I'm going to zoom it a little bit fast. Let's go to the 1123 area. So what's happening all of a sudden? So what just happened? This referencing on the chart right here, I'm going to draw this line. This is 1122. So 1122 right here. So at this point in time right here, right, we can see that something's changing. There's a development happening, right? What's the development? We see that 7665 all of a sudden became really, really strong. So in our heads, why are we got to think about this. Why are the market makers all of a sudden making the decision to go very long delta at this strike? Remember the goal of the market maker in the chat. What is the goal of the market maker when they are long deltas? Their goal is for price to close above this strike. That's the only thing they look for. Some of you guys may be confused, right? They're like, oh no, they need the market to go up. Oh no, they need the market to go down or support. No, there's only one thing that they need, even if the market closes 1 penny above 76.65. They win the trade, right? Delta is a backward looking Greek. It doesn't tell us forward predictions. That's the job of the second order derivatives. That's going to be gamma and vana, charm, depending on the scenario, depending on the time frame. But notice this. So mark this, 1122, we started to see 2.5 billion. And as soon as that strike hits that 2.5 billion, we can give it about the 70 percentile that price will not close below this strike. So as soon as we saw that, that's when we decided, okay, is there still money in the market to collect? Yes. Selling below low of day, 78,650. There's still money, but we do have to get a little bit close. So the closeness was 76.45 and the 76.40. Again, go back on my Twitter, and those are the actual positions we put on. And then come about New York City launch. Even at this point, you still kind of had the opportunity to get in on this. Look how much that delta has grown. So from 2.5, which is our threshold, it is now 3.66. Now, put our thinking caps on again. Do we think at 3.66 billion positive delta with almost half of the day completed, right? There's not that much time left in the markets. Do we think that the market makers would be willing to flip this down and to get rid of their existing long deltas and allow them to lose their position? Quite unlikely, right? In the chat, if you think the market is on a regular Tuesday with no further catalyst, that you think that the market makers are willing to let this go, let this 76.65 go, let me know. Let me know when you've seen that happen, because I know that it hasn't happened in 70% of the time, right? That's kind of why we slap probabilities on it. And then even when we got to 130, so I'm gonna bring you back to like 130, around when we actually started to come close to that 76.65, and why some of you guys, I know you guys started to get a little bit dicey, actually start buying options and debiting your way to end of day rally into the close. So that's 130. Let's go to 130 right now. So 130, we still have a fair bit of long deltas there. Do we think that they're going to give it all up? That's the main question. There's not much time left now. It's already we're only 2.5 hours left in the day, right? So every opportunity we had to get long again was if we tapped the 76.65 again, right? So hopefully you guys understand why that this developing turns into an A+ setup, that we're kind of waiting for the market to give us the idea of what it is that they need to do confidently for us to feel confident in our own positions that we want to put on. And so that is why I decided to sell, re-participate. Normally I don't like to sell credit spreads into New York City lunch, but it gave us the idea, right? This told us, okay, there's opportunity. Did we make that much money? Not enough. So then we gotta re-participate. We gotta participate again and try to add on to our positions. And so that was yesterday. Today, a little bit of a different story. So I'm going to bring you to today's open and why we didn't have, again, we didn't have an A+ setup, but it was still okay. It was still enough to get some positions on, because at the very least, we know that this kind of scenario, so this is delta. I'll bring up gamma as well, just so you guys can see gamma today as well, but it wasn't super representative. So take a look. So right off the bat, first thing we always do at the open, we determine whether there's an A+ setup or not, right? Because when we do see what an A+ setup at the open, normally we hit the market hard right away. We were already like max size 25 cons, something like that, right? But we don't, right? Unfortunately, we do not. IV opened at like 12%. It was super small. Not telling us that the market is set to make a very big range today, right? And exactly as we said, I told you guys that today we're very likely we're going to close under 7,700 and then above 7,650. So a 50-point range. We didn't even make that happen today. We got like 40. Right? And so with that idea, we decided to sell, again, the 76.40. And then we rolled it down to the 76.25. And then 77.15, we doubled down on that. That was a very good trade. So the idea for days like this, where we expect price to not move so much, where we expect price to chop around and kind of be very, very tight in range. Someone asked me this early morning, why didn't we put on an iron condor like immediately? Because on a 0TT time frame, what I found is the best value is to actually separately leg the iron condor on days like this. So we can get maximum values, right? So if you guys remember, when we sold the 77.15, we didn't open that right out the gates. We opened that after like the first 30 minutes of the market, after this gap closed. And then a little bit further, we opened it around 9.54 for that 77.15. And that is basically why we saw immediate profits on it, because that early morning volatilities increased. And then we're able to get in on that one. The mistake was the 76.40. This one we sold at the early in the morning. But then as we came down, right, as we were making our way towards potential low of day, when we stopped out of this one for 150%, that's when we decided to full size on the 76.25. Expecting again that 76.50 was going to hold us up in price. Now, why don't you take a look at the 76.50? Although it's not 2.5 billion, with the expectation that IV is very, very little today, we can kind of make a judgment call to say that we're not going to break through the 76.50. And if we do, that's a lot of delta that the market would have to flip. And you guys know the act of the market makers flipping over $1 billion of delta quickly usually leads to a much harder flush. With NVIDIA earnings, this is kind of just like grand scheme thinking for the scenario part. With NVIDIA earnings, I didn't expect a gap close. And so that is kind of why we use that strike to make our determination. And then on the upside, 7,700 psychological level, there is a gap there. But going up is a lot harder than the market going down. It's much quicker when the market comes down. So that's actually why calls decay faster than puts. So that was the trade today, right? And so we recovered today early on, taking a hit of 1,000, positive 585 after. Yes, this is recorded. How is IV calculated on quantitative? It's a cumulative of all strikes of all the strikes on SPX. Yes, it would be, and you can filter it however you want. But I actually don't think, because it takes the front volatility more seriously. It's actually better to just, from my experience, you could just leave it alone. If you filter it through, you do get a few number changes, but it's not going to be much. So there you go. That's it. That's the Q&A. I'm going to open up the floor now to you guys in the chat, and y'all can ask me whatever questions you may have, and we're going to go through them. We are going to go through them. I'll probably just leave this recording on so that I'll just answer everyone's questions the way that I do it normally without cutting it. But sold call credit spreads at 76.75, 76.85 at 12.30. Ooh, okay. So you sold it in the midst of New York City lunch. So 12.30. Highest negative DEX, but it reversed and I lost it. Okay. Antija, I am going to tell you right now that IV at 12.30, you were looking for like the bare minimum. IV was already 8.96, so I don't know what the strategy was there to sell that. If you collected enough credit for that as well, I just don't know. If you're looking for the market to continue going down, let's take a look. So let's go to 12.30's data. Do you even come close to? This is 12.30. And notice again how we're not focusing on Vanna. It's because Vanna only plays a part when IV is very high. So when IV is 30%, we look at Vanna. But being that IV was like 9%, kind of looking for the moon and the stars there. 76.55. Okay, yeah, I mean, Antija, you don't really, so gamma is pointing towards 76.55, but you don't really have delta supporting you there. You don't have anything near 2.5 billion, and it's already been kind of messy. If you take a look at the net difference there, so here, take a look at that 76.55. So this is going to be a really good view here. If we look at net difference, so 76.50 is right here with a little bit positive still overall. It's just that you're kind of collecting too little. I would assume that you didn't collect a lot for this kind of a move there. Selling credit spreads, and you actually sold it at the worst time. So in low volatility environment, if you're selling credit spreads the halfway point of New York City lunch is actually when you kind of need to stop. You're not collecting a lot for the risk that you're putting on. So 9:30 a.m. PST, 12:30 p.m. EST, you kind of have to switch to debiting. But if you were looking for like just a little bit more at that 12:30, it got pretty close to that 55, 50. 55. I mean, okay, also, I actually want to show you this too. If you put that on at 12:30, so you put that on right here. Like right here. Right, you put that on right here. MVC was kind of met. Right? We give it a $5 wiggle room, right? So what was your I mean, my question goes back to the what is it that you were looking for? Because we met it. 76.57 is well within 5 points of 76.55, which is the most exposed gamma strike. That's a pivot scenario, right? And Tija, you're familiar with the MVC study, correct? Anyone in chat? Are you guys familiar with the MVC study? Yes, and Tija. Okay, so then you know that it was a high likelihood that it was going to pivot there. That was probably the extreme that we saw. There's nothing really more to it than that. In the chat, I'll actually give it to you guys right now, so you guys can have it for the future. But this is the MVC pivot study. When we hit the most valuable contract in a low volatility environment on gamma side, there's 54% of the time it actually pivots, it reverses the direction. 28% of the time we close within $5 range of that strike, and 18% of the time we go further and close the day. Notice I'm saying close, so we're closing the day further than that strike. That only happens 18% of the time. So again, just going back to your trade there, Antasia, like you already kind of hit target, 76.55. I'm pretty confident that your credit spread didn't decay fast enough though for that move down. And that's probably what you got caught in. At that time, you probably should have debited, but I wouldn't be chasing something that's less than 20-point move. So you're looking for 10 points. If you entered at 12.30, that's 76.65. Low of day is potential is 76.55. That's only 10 points. What further mean? Further down. Yes, it would mean further down. So, let me delete that one there. This study refers to if in this scenario, because it's downside, you'd be looking at downside. So the market closing the day below 76.55, it's only an 18% chance. That doesn't make sense to chase for it, in my opinion. And so you're just really sticking to the probabilities of the market. Can I use quantitative futures or after hours market? You can definitely use it for futures. I know there's plenty of futures traders here in the community. Myself, I am not one, unfortunately. Futures just doesn't really work with my brain. After hours, we don't have any after hours data. But if you're trading the New York session and your goal is to follow the money, then that's going to be dictated by options, because we know in the options market, about 10 times the amount of premium goes towards options than versus futures. So I don't know what strategy it is you're running, but that would be the idea. Do you have a strategy for playing end of day? I don't use the word play, but trading end of day, I normally don't. It depends on the scenario. If I think there's going to be an end of day juice up, I normally like to put on risk via a debit spread. But outside of the debit spread, not really. Not really. How long have I been trading? I've been at this for about 9 years now. So 9 years. That's including the years that I was unprofitable, which is about, I think, about three-ish, four-ish, depends on what you think is unprofitable. What do you see for a reversal confirmation? I don't. So I'm guessing, Antasia, you're looking for something, for me to say something like a candle. Like I think you guys know I don't consider candles to be part of my analysis. I really strictly stick to probabilistic natures of the market. Based on all the studies that we have, and then I base it on the change in delta and gamma. I don't think, I'm pretty sure the market would have ripped up before gamma or delta would have reacted. That's forward looking for sure. Let's see, 12. So, okay, we're going all the way to like the 50s for things to change. Yeah, that's quite a change there. And then, okay, yeah, this all of a sudden, that's a big move. When did this 74.70 start to blow up? Okay, so there we go. There we go. One more minute. Let's see. Yeah, so around 12.57 to 12.56, you can see just the amount of delta that's changed there. I don't know if that would have been something that you consider. That's like already, like the move has already been made for for the turnaround. No, and TJ, I don't have anything for any signs of reversals. I really just stick to the probabilities, right? If it was me and I was trying to take that trade, which I didn't, I want to be transparent with everyone. The trades that I took, you guys already know them. I sold an iron condor and I just kind of closed my eyes the rest of the day. What I would have done is, if I was stuck in this though, is I probably would have just sold puts, because that's what the market is kind of telling us. Like that was the max, that was the extreme. We already hit it. So I don't know if that's the best answer, but it's going to be the answer that I'm going to go with, because yeah, that's it. That's all I got. Net drift, yeah, if there's a crossover, if we start to see over 1 million in divergence, that's probably going to be an idea for you. Crazy at 12:40 PST. There's so much positive delta, and then they flip that last 5 minutes. Yeah. End of day shenanigans. I'm sure that you guys by that point were pretty profitable. In the chat, let me ask you guys, who's actually stepping into selling premiums in the market, or is it still just a handful of us in the markets? I know some of you guys started to step into it. I know Pace Yourself in the chat, you started to step into it. I don't know if you're here or not, but you're starting to see it's a lot easier to navigate the market. Yes, sometimes it looks like a lot more risk that you're putting on, but look at us. We're kind of laughing today, right? Yesterday and today, just selling premiums everywhere. Selling them beyond the realm of possibilities. Starting out, that's nice. Finding like here, okay, nice. Selling puts there, nice. I will post this on YouTube probably after dinner. I think I like seeing. Oh, Anne, welcome. And I gotta get you up here one day, Anne. You let me know when you wanna give us a little spiel here in the quantitative team, because I think a lot of people would probably be interested in hearing about your story there too. What am I drinking? Kirkland cold brew, but in a cup with ice and oat milk, because oat milk is for real men, right? Oh yeah, I got a bunch of work tonight, and I'm not streaming tomorrow, so that's why. I'll see what you guys. Yeah, I guess I'll close up the stream now and see. I can answer that question for sure. Yeah, just a reminder, I'm not gonna be here tomorrow, so y'all will have to survive this market without me, but make me proud. Hopefully you guys see an A+ setup. I'm hoping for you guys, man. Would selling premium on XSP to get a feel for it be okay, or is it pretty bad? It's pretty bad on XSP. The bid and ask is a little bit more widespread. That's because it's thinner. But if you're paper trading, just do SPX. There's nothing wrong with that. That's what I think. Do you only focus on SPX net drift? Do you compare with Spire net drift? Nope, I only focus on SPX. XPS fluid is disproportionate institution is heavily used before the engine volatility trading spot tells you about ETF participation. You know what, Ale? That sounds like a statement that you're making, not really a question. So I'm gonna leave it up to you. You can decide to use SPY if you want to. I often butt heads with colleagues that use SPY, but it depends on what it is you believe. Like, what is it that you are trying to capitalize on? Actually, let's bring up something. Let's all bring this up together so we can see. If I go to last FOMC, remind me what the date was. Was it July 10th? I think it was. No, it was June 10th, right? Nope. 3rd, 17. Nope. Oh yeah, it was the 17th. So let's go June 17th. Okay. This is not going to be the best example, but I'm just going to show you anyways. Okay, so I want you guys to see this, Ale. Ale, this is specifically for you. Thank God I'm still recording this because I might actually make a clip out of this. Okay? So what are we looking at? This is FOMC. Okay? This is SPY on June 17th. Now you say, this is your statement. SPX flow is disproportionately institutional and is heavily used for portfolio hedging and volatility trading. SPY tells you about ETF participation. That's your statement. Okay? So if that is what you believe, and you are looking at FOMC today, what do we see on SPY? These are filtered for out of the money, so risk on behavior. No spreads, no tied legs, just directional single leg long options. What do we see? Make it look a little bit better. Yep, you're seeing SPY retail traders getting absolutely clobbered, right? Look at these fools. Look at these guys. 3.16 million in calls ahead of the FOMC event. And what did they do? They sold puts. They sold a hell of a lot of puts. 4.16 million. Okay? So you guys, I'm not crazy, right? This is what we see. And this is again following your statement. And I'm really glad you asked that question and made that statement because it's going to help a lot of people kind of recognize why I like to follow SPX. So we see this, right? Their calls got absolutely rinsed. They're probably bleeding heavy on this day on 0DTs. Let's flip it. Let's flip it to SPX and let's see why it was a clear idea to just short the market before the event. You guys ready? You guys ready for this insane change? Bam! What do we see? Here's SPX. Filtered for the same thing. Out of the money, so risk on behavior. No tied legs, no spreads, just single long directional options. If this is institutional and this is how much they're putting in, I'm gonna follow institution. I don't care about anyone else. But this here, folks, is what we're seeing. 2.3 million in calls and 31 million in puts ahead of an FOMC event. Who do we think knows something is going to happen? The guys trading SPY or the guy who put $30 million in puts today? What do we see? What are we thinking? Who wants to buy SPY calls today? On this day, rather. I don't know. Raise your hand. Be honest. You're thinking, oh, FOMC, I'm going to follow these guys with a little bit of money. Yeah, this is like the guy, if you guys like cars. I'm not a big car guy, but the guy on SPY, okay, the guy using SPY, this is most likely a Civic driver. Okay, you're following the guy in the Civic, the Honda Civic, just chilling, right? This guy obviously lost the Civic after that, right? But if we look at SPX, right, this is the guy driving the Ferrari, right? And he didn't lose his Ferrari. He ended up buying another one. Okay, so I'm gonna leave it up to you. If you want to follow SPY, like by all means, I'm not gonna tell anyone to do what something else. If you want to do your analysis, you want to study SPY, by all means, do your thing. If you want to take a look at where premium is actually going, if you want to follow, if your idea is to follow the money, well, the money, it's very clearly here, and I'll show you right now. This is how much money flows into each. So SPX, you have a total of $6.23 billion flowed into the market today. All things considered, today is a pretty light day. It's pretty quiet because of the NVIDIA event, but nonetheless, it still proves a point. Take a look at SPY. Where is SPY in the rank? It's even below Q's, right? Only 1.27 billion was spent on SPY today. So if you're following the money, which one are you following? The guy with less or the guy with more? I don't know. I'm gonna leave that up to you. Let me flip this back to tomorrow. Let me flip all the dates to tomorrow, actually. But yeah, really good question. I'm gonna go ahead and turn this recording off, so I'll post it up on YouTube after dinner. I will stick around for another couple minutes and answer some questions if there are any. 27, perfect. Okay, we're good. So those guys watching on YouTube, drop me a like. I don't know, follow me or don't follow me. I don't really care. Y'all can keep losing the market. It's fine. Okay. All right, peace out, people.